On the last trading session of Thursday, gold spot printed a closing price little above $1,729 per ounce. The numbers rounded and the market is closed. And on last week, gold traded as low as $1,677 per ounce and as high as $1,733 per ounce. Numbers are rounded and the market is closed. Gold is in a correction and it's trading below its all daily simple moving averages, except the 20 days daily simple moving average. For the RSI readings, it's moderate on the daily chart, bearish on the weekly chart, and still moderate on the monthly chart. And the supports are seen at 1700. If it breaks, then 1676, then 1660, and the resistance levels are 1736, then 1758, then 1770. That's all. I'll move on now to the economic calendar. On the economic calendar for the coming week from the United States, we are waiting for the following economic headers to be released: the ISM non-manufacturing PMI on Monday, then JOLTS jobs opening on Tuesday, and the imports-exports trade balance on Wednesday, and Fed Powell speech is due on Thursday. That's all. We'll move on now to the trading strategy. Hi again, it's always nice to meet you in a new episode of our weekly gold price forecast. As I talked in my previous few videos, I talked actually about the factors that affect the price of gold at any given point of time. And I talked about the rising yields, the strength of the US dollar, and the continuous growth in the equities, especially the US stocks. Whatever these three factors are the factors that affect the price of gold at any given point of time. And when all these factors are in a play together, gold and the rest of the precious metals are going to suffer. There is no other way around. And this is what happened exactly on the last week when gold lost about $50 to $60 in a course of two trading sessions. What do we have to understand here? That investors are not going to favor gold on the other trades with this much of optimism out there in the markets. Markets are thinking, or investors are thinking, that things are going to get back to what it was before the pandemic, and even better than how it was before the pandemic. And that's why there is this ongoing risk on trade, and the investors' mode is to favor the risky trades on the safety trades. This is the environment which we have at the moment, and this environment is not supportive for either gold or the rest of the precious metals sector. However, technically gold is still pointing towards 1770, providing it can find acceptance above 1736. And in the case that we are having at the moment in this market, I would advise you to wait a confirmation of a daily close above 1736 and to trade from this level to 1770. Above 1770, I don't think gold could go higher than that. However, this is all for our video for this week. Thank you guys for watching. Please share, like, and subscribe, and I will see you next week in another video.